The next US inflation report lands tomorrow, and it's arriving just as President Trump's latest wave of global tariffs begins to ripple through the economy. The June Consumer Price Index, or CPI, is expected to show prices rising at a faster pace than in May, signaling the early effects of mounting trade tensions. According to Bloomberg estimates, headline CPI is forecast to climb 2.6% year-over-year, up from 2.4% in May. On a monthly basis, prices are expected to increase by 0.3%, triple the 0.1% gain recorded last month. Core inflation picks up. The core CPI, which excludes volatile food and energy prices, is also projected to heat up, rising 2.9% annually and 0.3% month-over-month. Both are slight increases from the prior report. In May, declines in categories like used cars and apparel helped cool inflation. But economists now expect that trend to reverse. Analysts from Wells Fargo, Bank of America, and Goldman Sachs say June may be the start of a gradual inflation rebound, fueled in part by Trump's expanding tariff campaign. Tariffs taking a toll. Over the past week, Trump has sent out letters to over 20 countries outlining new tariffs ranging from 20% to 50%, including a 35% duty on Canadian goods and 30% on imports from the EU and Mexico. He's also floated 15% to 20% blanket tariffs for most US trading partners, a sweeping move that's left global markets watching closely for countermeasures. The EU has already said it may respond in kind if no agreement is reached before the August 1st deadline. Fed in wait-and-see mode. The Fed is unlikely to respond right away. Markets still expect the central bank to hold rates steady at its next meeting, as officials gauge how tariffs will filter through the economy. But the next few months could be crucial. Wells Fargo's Sarah House said companies are still burning through pre-tariff inventory, which has helped hold down prices. But those buffers are wearing thin, and as new duties kick in, import costs could pass through to consumers more visibly. Still, House noted that a soft labor market and slowing services inflation may keep this from turning into a full-blown spike. Instead, it's more likely to look like a tariff-driven bump. Where prices may rise next. Economists expect inflation to pick up in several categories. Used cars and core goods, where price drops in May, may now reverse travel and medical costs. On the services side, and shelter, which continues to rise and remains a sticky component of inflation. Goldman Sachs estimates core CPI could rise 0.3% to 0.4% monthly in the months ahead, but also expects inflation to ease later in the year, as housing cools and labor markets stabilize. Stay tuned to DataDropDaily for real-time insights on inflation, markets, and global economic shifts, all in under 5 minutes.